Breakout versus pullback. What is the better trading strategy? How do you approach it? What are the pros and cons? And 6 pullback and breakout strategies all packed into this video. So really make sure to stick around until the end. And I'm going to build the knowledge step by step. We're going to start at the basics and then later get into the strategies. So when we look at here our first example, we are looking at a breakout. And first of all, we need to answer what is a breakout. And the idea is obviously that you're breaking out of something. And those somethings, as we see later when we look at the strategies, can be many different things. Here, for example, we are looking at a channel breakout. We have a trend line to the upside, a trend line to the downside. The market was going down in a channel. And the breakout idea is that then you are looking for a trend reversal. You're looking to trade the uptrend once this downtrend channel has been broken. Obviously, we can look at different breakouts, high-lows, yesterday high-lows, weeklies, Donchian channel, moving averages, and all of the stuff that we will cover later. But the general idea is we are breaking out of something. And we are following this price now, and a few candles later, we are actually seeing a pullback. So after the breakout, the market moved up into the new trend direction for a short while. Then we have a pullback, and we are now retesting previous resistance as support. So we have a breakout and we have a pullback. And we can then see a few candles later what has happened. The market really started a new uptrend. And potentially both would have made money, but the question then is, what is better? What should you trade? And the answer is, as always, there's a lot of black and white. It's not one way or the other. Both have cons, both have pros, and we will get into that now. So when we look at the pros and cons and compare breakouts and pullbacks, again, it's not one is better than the other, but both actually can be traded profitably, and you will have to find out for yourself, and I will show you exactly what may be a good fit. So when we look at breakouts are usually considered an early entry because obviously the breakout comes before the pullback. You need to have obviously a breakout, then a move into the trend direction, a move against the trend direction, and then is where you get into your pullback. So early or late entry, there's no right or wrong. Some traders who have problems with patience prefer to have the early entry, but, and this is the biggest downside of the breakout approach, is that obviously the market will not go in one straight line to your target, and the market will often, not always as we will see, follow this wave structure. So as a breakout trader, you will often see an early success, so you have some unrealized profits. Then the market may go against you to perform a pullback trend wave, which is very common in the markets. And this is usually where the breakout traders start to sweat a lot, because obviously your unrealized profits start to evaporate, and very often the market will come back into your entry and maybe even sometimes challenge your stop loss, come very close, or you will even get taken out on your stop loss, especially if you move your stop loss too soon to break even. So this is the biggest con of a breakout approach, that those wave forms that the trend is going through is often eating up your unrealized profits. On a pullback, on the other hand, there's a big pro, which is that often you have a bigger reward to risk ratio, because when the market gets back to the structure and to the retest area, you will often be able to get a much closer stop loss, a more favorable entry price, especially if the initial breakout is very large. Then the pullback entries sometimes can give you a much better reward to risk ratio. However, what is the biggest con of a pullback approach is sometimes you will miss trends, because not always will obviously you have this ABC structure, this breakout, pullback, and continuation formation. Sometimes the market will just break out and never look back. And if you are a pullback trader, you will not have an opportunity to get into such a trend and into such a trade, because there's just no pullback. And this is the biggest con. It's not necessarily something that is bad, because it's not costing you something to not get into a trade where it's not your edge, but this is something that I want to spend a little bit more time on, because how do you know if there will be a pullback or not? This is the question that I get asked in every YouTube live. Every time I go live on YouTube, which I do every Tuesday, I get asked this question: how do you know if there will be a pullback or not? And the answer is, you can never know before, because as traders you cannot predict what will happen. You never will be able to know if a specific breakout will come back as a pullback. However, what are you going to do then, obviously? Because if you are a pullback trader or a breakout trader, or decide what you want to be, this is a very, very important piece to the puzzle. And there are a few ways how you can deal with that, and a few things that you need to keep in mind when choosing your trading approach. So when we ask ourselves, breakout or pullback approach, what is better? What should you do? What am I going to choose? First of all, I would always recommend that you choose one or the other. You decide, especially in the first few months, are you going to be a pullback trader? Are you going to be a breakout trader? Choose one or the other. And this then leads to the next point. You will know exactly what your edge is. Write it down, write it on your wall, write it on your screen, write it somewhere where you can really see it. I am a breakout trader and I capture high momentum breakouts. Or I'm a pullback trader. I wait for the breakout and then the fading of momentum to get a favorable price on my entry. And also, this is very important, know what your edge is not. As a pullback trader, this is even more important. As a pullback trader, you have to be crystal clear that you're not going to capture all moves. Sometimes the market will run away with you, without you, obviously. There's a breakout, the market goes off, you have no pullback, you can't get into those trends. This is very important. You are a pullback trader, there is no pullback, you cannot get those trades and you cannot capture those profits. And this is something that you just have to be okay with. And this is, I think, the biggest challenge that most pullback traders face, is because they wait a long time, they wait for the breakout, they're almost there, they just need to wait for the market to pull back and give them the entry, and there's no pullback. Or maybe it takes too long for them and then they will get in too early, and then the pullback will come, and then they are in already at an unfavorable price, and then they have completely screwed it up. So you really need to know what is your edge, but I think it's more important to know what is not your edge, because the market is moving 24/7, especially if you are a Forex trader or maybe crypto, well, 24/5 obviously in Forex, but the market is always moving. And no matter what trading system you choose, no matter what strategy you're going to apply, you will not be able to trade and capture every single move in the markets. And you're going to miss 80, 90, 95% of all the price moves. The point of having a trading strategy is that you have a very well-defined edge that you're trying to capture. And there's a very well-defined thing that you are after. It's just the same as, let's assume you open a physical store or an online store, probably more time-related, and you want to sell a product. You're probably not going to start as a new Amazon and try to sell everything. You are going to choose a niche. What is your niche? And you're going to sell one product at a time. Obviously, you could sell so many different things and you could make money on all the products, but that's not the point. That's not where you're going to see success early on. Once you have mastered selling one thing, being successful in one niche, you can branch out. If you have been trading profitably breakouts, add pullbacks. If you have been trading profitably pullbacks, add breakouts. And this comes to point number 4. After a while, you can obviously combine both. You can, for example, have a breakout approach. This is your core strategy. And then if the pullback comes, you're going to add to your trade. That could be a thing that you can do. Or you just split your risk, break out half of your position size, pull back the other half. So you can combine the tools. But this is always how I would recommend to go about it. Alright, cut. Now let's talk about 6 trading strategies, as I have promised in the beginning. First, 3 breakout strategies. So a very common one, yesterday high and low breakout. So this is a yesterday high low indicator. It is free on TradingView. You just search for high low yesterday and it will roughly look like this, and it will just draw yesterday's high. You can see this is the high from yesterday. Yesterday low is here, so it will plot those on the next day. And what you want to do is you wait for a breakout. And you can then obviously layer other trading tools, concepts, indicators on top of that So for example, we could, in my last video, talked about the breakout buildup, which is just how is the market moving into a breakout level. So we have a higher high, a lower high, and another lower high. We seem to be generally in an overall downtrend. So those are things that will or may make your trades then a higher likelihood to succeed if you're trading with the higher time frame and you have those other add-ons. Very simple, very effective breakout approach. Another one, pivot point breakout, especially a daily pivot point breakout strategy is very, very common. And what you generally want to see is a momentum breakout. Very often those traders, especially day traders, like those pivot point breakouts, especially when those breakouts happen in a London or a session open, London open, New York open. Those are usually perfect times. If you see a pivot point breakout at the daily pivot point, this is something to look for. Very, very high probability and very often used. Moving average breakout, classic one, and I made videos in the past about 10 breakout strategies that everyone can use. You can check that on my YouTube channel. I love to trade with a 50 period moving average. So the blue line is the 50 period from the 1 hour. And here you will see it just creeping here into the frame. This red line is the 50 period moving average from a higher time frame, the daily. And what I want to do is I want to trade into the direction of the higher time frame moving average. So in this case, we are above the moving average from the higher time frame, which means I want to look for longs in general. And then I time my entries on the lower time frame. I look for patterns around the moving average. So obviously, as I said, as a breakout trader, you need to know what you're breaking out of. Here we have a combination of a double bottom together with a trend line. You can even put in a horizontal level, and then on the breakout above the moving average here, that is where you see the new trend. In this case, we had a moving average pullback even. Very common to see as well, moving average pullbacks. I made many videos on that. Very, very high likelihood that they are happening on your charts as well. Now let's take a look at pullback strategies. And obviously you can take any or, well, most breakout strategies and layer a pullback approach on top. Obviously, if you have, like in this case, a high-low yesterday pullback breakout approach out of the channel, you could then wait for the market to pull back into the yesterday high and low and then look for your patterns there. You could then again add trend lines, whatever you want to do to time your entries. Another one, trendline pullbacks. I made many videos on trend lines on my YouTube channel. You can dig them up, they are everywhere. Yeah, we need to have obviously a valid trend line. Basic rule for a trend line, 3 touch points, because with a diagonal trend line you can always connect any 2 random price points, so you really need 3, which we do here. 1, 2, 3, 4, so more than enough. You wait for the market to break out, you come back, and then you wait for some rejection signal. You may even go down, this is the 4 hour, you may go down to the 1 hour, to the 15 minute, and then time those trades there. Or very classic, very nice trading strategy that I love to trade is a Fibonacci pullback. You look for your ABC pattern, A, B, C, you can see perfect 38.2 or 61. Very, very common to see the market, and very important that the market is actually respecting one of the fibs. You don't want to see that the market gives you A, B, and then the C point is somewhere in the middle of nowhere between 38 and 0 or between 100 and 61.8. This is what you want to avoid. You really want to make sure that the market is paying attention to any of those 3 Fibonacci retracement lines. And then very often you will see that is 38 goes to 161. Very, very common to see. And this is then how you can add targets as well using the different tools. So I hope this video helped you add some clarity to the big question, breakout versus pullback. What do you prefer? Let me know. Do you like pullbacks? For what reason do you like them? Or do you prefer to be a breakout trader? Let me know in the comments below. I really look forward to this discussion because this is something that has been coming up on my YouTube channel for years, and I'm pretty sure it will still come up for years and years to come.